Welcome back, ladies and gentlemen, my fellow slumdog traders out there. We are bringing you another one-of-a-kind video. And today we are actually going to go into details about the infamous TLT. And before we do that, though, make sure you're subscribed and drop your thumbs up on the video, if you haven't done so already, of course. And with that, let's jump right into it. So, I know a lot of you are probably thinking, what the hell is this? What is all this purple and what is all this green and red here? So, don't fret, don't panic. The purple, is the SPY. And if you watched our previous video, I talked a little bit about what the SPY is and how it relates to TLT. Now, if you notice, these two stocks are what we call the inverse of one another. So what one does, when one goes up, the other goes down, which is why I'm playing this so much. So SPY is basically an indicator of how the market is. And anytime that something big or some big news drops when it comes to retail, energy, or even tech, this is where I go to check and to see how the news is reacting and how the market is taking in or digesting the news. Now, for TLT, the reason why I'm so big on, me personally, big on TLT is because of the fact that this year has been an interesting year. Of course, we had the pandemic. Of course, there's a whole bunch of civil unrest going on. There's a whole bunch of political nonsense that's occurring, which I'm not going to go into. But there's a lot of stuff going on this year. 2020 has been a ridiculous year. And it's been one of those rare years that there's a lot of volatility. Now, with that being said, back in March, TLT was damn near a saving grace for some and actually life-changing for many. As you can see, back in March, I would say March 9th, something big happened. If you know what happened March 9th, you are a godsend. You know exactly where I'm going with this. March 9th is when the Federal Reserve cut rates to damn near half of a point. This is when everybody and their mama that was smart rushed into TLT. Why? Because TLT follows the 20-year Treasury bond. And what that means is it follows the 20-year Treasury bond and the interest rates that go along with that bond. In other words, anytime the interest rates are cut, TLT will go right up. Anytime the market goes down or people are scared or something that's ridiculously happening in the market, say a pandemic or something else, they switch over to TLT. They do what we call a rotation. They basically rotating stocks. They're going from the stock market itself into treasury bonds, or in this case, TLT. Now, that pretty much surmised what TLT was, but I know a lot of you want a textbook definition, so let's bring that up. So, what is TLT? So, TLT is the NASDAQ symbol for iShares 20 plus year Treasury ETF. So, not ETF. Ranked as one of the best government long bonds by sources such as the U.S. News and World Report, TLT invests about 90% in the underlying index, which is and 95% in U.S. government bonds. Now, you're probably like, well, that doesn't make any sense. That doesn't mean anything to me. Well, let's continue. Let's continue. So what causes TLT to go up? If rates rise slowly enough, the extra yield can somewhat make up for the price decline. Where TLT really shines is during an equity crisis, aka the stock market dropping, or the market itself, where flight to safe assets causes yields to fall quickly and TLT price to increase. This can help offset losses in equities. Meaning, if you have shares in a specific company that you want to keep and you want to pass down to your son, your daughter, anybody, TLT is the way to offset your losses in those stocks. So TLT is basically kind of like a hedge. It's a stock hedge in a sense. But be careful, because TLT can also make you lose a lot of money, which is why I'm going to actually explain a little bit, not too much in detail, what a debit spread is. So that way you can see firsthand on how I am actually playing TLT in the future. All right, but let's see here. We don't want that. All right, so this is the lovely TLT, and these are my lovely plays that I have so far. Now, right now, this says 400 contracts, but in actuality, I only have 200. Reason being is because with a debit spread, what you're doing is you're buying one contract and you're selling another with a different strike price. So in reality, I have only 200, which is half. So what I'm doing specifically with TLT, because of the fact that it is uncertain on when exactly or what is going to cause this to go right back up to that price range that we saw back in March, I am buying a whole bunch of different plays with time, and I'm actually going to be looking for more and just basically adding on to what do I already have, only because of the fact that I see something really big happening in the not so distant future, whether it be because of the coronavirus cases spiking up even more with this first wave, or it's the fact that there's no liquidity in the market and things are not really what they seem. Because, I mean, if you look at the SPY, this bad boy was up to 337 back in March. Or, I'm sorry, but February, before the pandemic occurred. Now it's barely creeping back up to, what we at here? 303. That's $20. That is 20. And then the lowest was at like 222? So I see, and this was during the trade war as well. Now that I'm thinking about it, this is when everything came together. So that's another thing. The whole trade thing with China, that's still uncertain. So that's also more negative news to play into this as well. Not only that, but we still haven't heard anything from another round of stimulus from the government or from Congress, because the feds are like, hey, we can pump the market, but they're going to be buying corporate bonds. So that's another reason why TLT is such a great play. If the feds are buying bonds, and not only that, if they also decide to do another emergency rate cut, because look, this is something that you can also look at. This is the U.S. Department of Treasury website, and this is a data chart that basically tells you the interest rates on each and every single day for each bond. Now, TLT follows the 20-year bond. So look, back in March 9th, let's see here, March 9th, this is when they cut rates. It's at 0.87. 0.87. Look at how much it was before. It's ridiculous. 1.44, 1.93, 1.89. That's normal. That's not normal. That's when the market was actually high. And then look, once the market started getting pumped up, once the stimulus checks started coming out and there was talks about that, it was going up and down, but it still stayed above that 0.8. And then it's started going back up because everything seemed good. Everything seemed like it was taken care of. Now look, it's a slow downward trend again. And today is June 24th. So another reason why I'm playing TLT for the future as well. Now, not only that, but we also have what they call is a bank stress test. That is going to be done tomorrow, or the results are going to be coming out tomorrow. And basically, the purpose of this test is to examine how the potential shocks from adverse market conditions could undermine the capital position of an institution. Basically, meaning let's see how much negative weight you have. Let's see how much you can take. Let's see what's really going on underneath the sheets in your banking system. Like, are you really paying out dividends, or are you holding on to cash that we gave you? Like, what are you really doing with your money? And this is exactly what a stress test is going to show. And the Fed does that, I think, once a year, if I'm not mistaken. But that is a true determination to see whether or not our banks are holding up. And if they are, great. The market can level out, and I'm pretty sure the market would love that, and the market would go right back up. But if it doesn't, again, that's another reason why I'm playing TLT. That's more negative news. I'm telling you guys, the more negative news that goes against the market, the more the chances are the market is going to fall. Plain and simple as that. There's no other way to explain that. But again, none of this is a recommendation. This is all on you guys. I'm just here just showing you what I'm doing. And if you guys choose to follow it, so be it. So be it. And again, everything is sourced. Everything is on the links in my YouTube videos. So, and if you can also go back to these videos, you can see the links. This is an actual website from the government. So yeah. So that is TLT in a nutshell. Now, let me go back to showing you guys how to do a debit spread and why I'm actually using debit spreads as opposed to just buying a contract or a call outright. So again, a debit spread or even a credit spread. A credit spread is a reverse of this. I will be buying the contract that has a higher strike price and selling the one with the lower strike price. Now, I'm doing a debit spread because of the fact that the option chain on TLT is very, very crazy. Now, if we go into, see, what I mean by crazy, meaning it's holding up compared to contracts that will be closer to expiring. So they're not as volatile. So if there's like a small change in the market, or if there's a drastic drop in TLT, these contracts are not going to move as much. I mean, sometimes I know with Robinhood, these tend to glitch a little bit, and they tend to show you different amounts. Like these will go back to like a penny or like a couple cents off, but it's not the real actual contract price of where it's set at. But yeah, again, you would just basically go into Robinhood if you are using Robinhood to buy a debit spread. Also, you have to have this enabled. You have to have trading options, stock options enabled. I believe is level 2 in Robinhood. You can go into your account settings to do that. I'm not going to show you guys because I'm not going to show you my account number. All right, but to do a debit spread, literally have this on buy, plus switch over to sell. You see how the check mark there? Now it's white. That means it's selected. Plus, total cost of this will be 20 cents. Now, you're probably wondering, why are you doing it with a 235 strike between a 255? I'm doing that for a $20 spread only because of the fact that it was the cheapest at the time, to be honest with you. And this particular contract, as you can see, it's more than the ones in between it. So this one might be a winner here. Because if this one is pricing in completely different than the ones that are below it and above it, then there's a good chance that this is going to actually bring in a lot more profit. But we shall see. And again, it's all based off of the liquidity or the volatility of the option chain, which, because of the fact that we have more time, is really not going to be that much. Unless TLT moves down or up a ridiculous amount. All right. Hopefully that makes sense to you guys. Now, and of course, with the credit spread, it's the complete opposite. So I'm not going to show you guys. Well, might as well show you guys real quick. Hold on. Because it'll even say, where am I at? Buy, here we go. So let's sell. Let's choose one that's closer to the money. You see, it's more pricier. And that's why I also want to wait as well to see if any of these will drop in value. Because if, let's say, the market goes back up and TLT doesn't, or the interest rates goes back up. If the market goes back up and TLT rates, or the interest rates for bonds, goes back up as well, then these will drop in prices, which will create another opportunity to jump into TLT. So basically, I'm just going to ride this TLT wave the rest of the year, going into probably January, to be honest. But as far as a credit spread goes, let me show you real quick. So we're going to sell 185, and we're going to buy a 195. Saying it will cost me 78 cents. Now, it's a little tricky. If you are doing spreads, please be careful, because when you go into one of them, it'll ask you, well, you want to make sure you hit close. I don't think it's going to do it because we're in aftermarket hours, but let's see. Yeah, here we go. Are you expecting to receive a credit or pay a debit for this option? If your strike price, if your contract that you're buying is higher than the one that you're selling, you want to choose credit because you're receiving a credit. If it was the other way around, you would choose debit. Okay? Because you're selling it. It's basically you're doing the vice versa of the buying and selling. That makes sense. All right. So, ladies and gentlemen, that is it for TLT and a small summary of what a debit spread is. I hope you enjoy that, and I hope you've taken something away from this, even if it's just hey, I know that this guy is not really reliable, but hey, at least I learned that he's not reliable. You know what I mean? But regardless, I love you all. Stay blessed, and I hope you guys enjoy your lovely day. Peace out.